The green line is exponential moving average, the blue line is double exponential moving average, and the red line is triple exponential moving average. Three of these exponential moving averages have the same length of look-back period, but you can clearly see how the triple exponential moving average moves with lower lag and responds to the price action faster, but still it keeps the smoothness of a moving average line very well. In this video, we're going to talk about triple exponential moving average, or TEMA for short, which in compared to other types of EMAs reduces the lag significantly and makes it a better moving average line for short-term trading. Similar to double exponential moving average, TEMA uses the lag difference between different EMAs, but here in TEMA there is one more step, and a triple smoothed EMA is used besides the single and double smoothed EMAs. By doing so, the moving average line that is created stays closer to the price and responds faster to the price action. I don't intend to get into the formula and calculations behind this, and in practice you don't need it, but if you're curious on how it's calculated, just simply search in the Google and you'll find it in many websites. Alright, now let's see how we can use TEMA for trading. TEMA is a moving average, so it can be interpreted and used like any other types of moving averages, but here with TEMA it has less lag and it responds to the price changes more quickly, which makes it an excellent tool for discovering changes in the market and finding trade entries and short-term trading. As you probably know, the number of periods in a moving average has a direct impact on the amount of lag that the moving average has, and this is also true with TEMA. Generally, the more the periods of the TEMA, the more lag we will have on the chart. For example, as you can see on this chart, a TEMA with length of 20 is moving very closely to the price and it is responding to the price changes very quickly at the turning point of the market, as you can see. But a TEMA with length of 100 is far from the price and it is moving very slowly and responding to the price changes very late, because here in TEMA with length of 100, much more data from the past is included in the calculation, and this makes it to move and respond to the price changes very late. Now you may wonder how you must choose the right number of periods for TEMA. Choosing the right number of periods for moving averages depends on what kinds of a trader you are, and also depending on the trading strategy, a specific length of moving average may be used. Generally, short-term traders use shorter moving averages for identifying changes in trends and finding trade entries. Short-term traders usually use moving averages with length of 5 to 10. 5 is very fast and it's more commonly used in conjunction with longer moving averages or other tools for trade entry trigger. Moving average with length of 10 is very popular among short-term traders, and moving average with length of 20 is usually the longest moving average that short-term traders use. Moving averages longer than 20 is usually considered a primary level for short-term traders to identify major movements of the market. As I mentioned earlier, also depending on the trading strategy and tools being used, a moving average with specific length of period may be needed. For example, in a day trading strategy, a moving average with length of 200 may be used, which could be in a well combination with other indicators or tools used in that strategy. So it's true that short-term traders most commonly use shorter moving averages, but there is no hard rules, and depending on the trading strategy, a longer moving average may be used. Swing traders and mid-term traders usually use moving averages with length of 20 to 60, with 50 period moving average being the most popular one, and long-term traders and investors usually use moving averages with length of 100 and more, and 200 moving average is the most popular one among long-term traders and investors. Please pay attention that choosing the right time frame based on your trading style or what kinds of a trader you are is also important, besides choosing the right number of periods for moving average. I have a complete guide to choosing time frames. The link is also in the description of this video, and I recommend you to watch it later because it's very important to learn how to work with different time frames. Alright, now let's see what trading signals we can get from TEMA. The most commonly used buying and selling signals with TEMA are crossovers. When the price moves above the moving average line, it's considered to be a bullish signal and gives the possibility that the price may advance. And when the price moves below the moving average line, it's considered to be a bearish signal and giving the possibility that the price may decline. But please pay attention that these price crossover signals are very prone to be false signals, especially when the price is in a trading range and moving flat. One way way to filter these false signals is to have also a longer moving average that can show us the overall direction of the market, and then only taking the signals that are in the same direction with the longer moving average. In this way, bullish price crossovers are confirmed only when the price is already above the longer moving average, and bearish price crossovers are confirmed when the price is already below the longer moving average. For example, in this part, you can see that the price is above the longer moving average, which indicates that the direction of the market is uptrend, so we only take price crossovers that crosses above the shorter moving average. And in this part of the chart, as you can see, the price is below the longer moving average, which shows the direction is down, so we only take the price crossovers that crosses below the shorter moving average. By doing so, we can be sure that we are trading in the direction of the market. We can also have two TEMA on the chart and having a buying or selling signals based on the crossover of the two TEMA, which is called double crossover. One TEMA is shorter and the other TEMA is longer. When the shorter TEMA crosses above the longer TEMA, it's a bullish crossover and the market is considered to advance after that, so it's a buying signal. And when the shorter TEMA crosses below the longer TEMA, it's a bearish crossover and the market is considered to decline after that, so it's a selling signal. Please pay attention that these double crossovers are very prone to be false signals, and one way to filter these false signals is similarly to add another TEMA with longer length and use that TEMA for identifying the overall direction of the market. In this way, bullish double crossovers are confirmed only when the price is already above the longer moving average, and bearish double crossovers are confirmed only when the price is already below the longer moving average. For example, on this chart, you can see that the price is below the longest moving average, which indicates the direction is down, and we must only take bearish double crossovers. And also we can use 3 TEMA for crossover signals, which is called triple crossover. In this method, when the shortest moving average crosses above the other two, it's a bullish crossover, and when it crosses below the other two moving averages, it's called a bearish crossover. Generally, the signals generated by double crossovers and triple crossovers are relatively late, and one important point that you must pay attention is that when it comes to crossovers, we can have lots of false signals, and these crossover signals works well when they are taken in the current direction of the market. Please pay attention that, like any other tools in technical analysis, you should never trade only based on TEMA, and you must use it in conjunction with other tools and concepts of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.